it was about the education part, because that's that part which I'm giving to you right now, that is about the concept itself. And here we have the breakout parts. Yes, here we are talking about the breakouts, pullbacks. Here we are talking about the breakouts. That means I have to put this here, yes, so that's the right order. So yes, so, and today we have this one here, the SS27. Those of you who are following me, they know what the SS27 is. The SS27 is the 3 lower wicks here and the 3 upper wicks here. 3 upper wicks, 3 lower wicks. After a downtrend, yes, you get far away from the 2 deviation lower Bollinger Band. Then you have this kind of 3 wicks. Yes, and these 3 wicks are showing you buying pressure. And when you have this kind of constellation where you have 3 wicks, then you can go into the trade after the fake breakout of the first candlestick of this 3 wicks, yes, because 3 wicks means 3 candlesticks, and in many cases these 3 wicks are, yes, there are obviously then also a morning star. Yes, this is a morning star, this is the evening star, and then when this candlestick is breaking the opening price of the morning star, yes, and creating the fake breakout, then you have this kind of sure shot, yes, the sure shot 27, which is the 3 lower wicks or the 3 upper wicks, the 3 wicks one, yes, far away, again, ranging market, going far away from the 2 deviation Bollinger Band, and then you take as a stop loss the low of the first candlestick or the second or the third one. You have to see which is the lowest one, and this is where you put the stop loss, and then obviously, yes, then you can to see the target, and based on the price action you can determine where the price will go. Yes, important is here that you get the fake breakout of the opening price, of the opening price of the first one when we are talking about the morning star. When we are talking about the evening star, yes, then it should be the opening price of the bullish candlestick here of the evening star. Okay, important is here the same stuff which I told you. I will not repeat this. The same stuff which I have explained here on the SS28 and SS9. Yes, because at the end you need a downtrend before, then you have to go far away from the 2 deviation, and the best is obviously when this kind of candlestick of the 3 wicks, yes, will be above the 1 deviation lower Bollinger Band, and this one here will be, yes, below the 1 deviation upper Bollinger Band, because then we know we are going into ranging market.